Hello friends, this is a part 2 of the financial investment. Watch the part 1 to know more about the dawn of capitalism and the power of compound interest. In this video, we will look at the 5 ways of investing your money. At the end of the video, we will see how investing will help in making our country prosperous. First, saving account. The traditional way to save money is in a bank savings account. People invest their money in it, and after getting a fair share of interest on their savings, they think that the job is done. No, not yet. They should check whether the interest rate of their saving account tackles the inflation rate. Probably it's not. The interest rate provided by the bank is much less than the inflation rate of products we use on a daily basis. Always remember to check your interest rates while investing in a savings account. Second, collectibles. A collectible is a collection of items that is of high worth because of its rarity or popularity. Categories of collectibles are antique items, toys, coins, comic books, stamps, etc. It takes a lot of time to collect and take care of them. They are good investment, but the cost of maintaining them and risk of them getting stolen or getting harmed in natural calamities is very high. Also, returns from collectibles may vary time to time. Third, real estate. Real estate is generally a great investment option. It can generate ongoing passive income and can be a good long-term investment if the value for property increases over the time. Let's continue our Sam and Bobby's example from part 1. After 5 years, Sam has a car which is old and Bobby has capital of 8,29,510 rupees. Bobby invested this capital in a property and gives that on rent. Now he has converted that capital into an asset for passive income. In real estate, we can get returns in two forms. Passive income in the form of rent, or you raise capital by selling the property after increasing its value. Real estate is profitable in many ways. Most of the times, the returns from real estate will be much higher than the inflation rate. But to gain these returns, you need a large capital as compared to other investment options. Fourth, bonds. In case if an organization needs to raise capital, then one of the options is through bonds. Bond is basically a loan agreement between the organization and people who buy these bonds. At the time of issuing the bonds, organization decides the rate of return as well as the duration for that bond. It is accountable to pay an amount with decided rate of interest after a specific period of time. Bonds are generally safe to invest and will give fixed returns. In India, there are two major categories of bonds: secure bonds and unsecured bonds. While investing in bonds, prefer secure bonds because even if the company who issued those bonds gets bankrupt, your money will be paid by selling the assets of the company, and chances of losing your money are very low. The returns from bonds are enough to cover inflation. Fifth, stock market. There are two types of investments. First, stocks, direct investment. Your friends, relatives may have warned you. If you buy stocks, you're throwing your money away. Basically, the problem is people lose their patience and start buying high and selling low. And the result they get is loss. Before investing in any company's stocks, you have to do your homework about that company, or else you are at huge risk. You have to check the company's fundamentals before investing in it. In the long run, companies which have strong fundamentals will definitely give you good returns. You can easily tackle the inflation rate if you choose and invest your money wisely in stocks. Second, mutual funds, indirect investment. This is the most famous investment option nowadays. In mutual fund, the fund managers of the brokerage firms will invest your money on behalf of you. If you don't want to involve yourself into complicated calculation of stocks, or if you want to diversify your investments, then you can choose this option. Fund managers take money from people and create a pool of money and invest that money on behalf of people in their analyzed company stocks. Most of the times, mutual funds are considered as secure investments, and it will assure you to tackle the inflation. Now, we will see how investing your money will make our country prosperous. Let's understand this with an example. You work hard and invest your money in bank. Bank uses your money to provide loan to the companies. These companies invest the loan amount for expanding. This will create more jobs. More jobs means more paychecks. And if each individual again performs the same cycle, then it will help our country to be more prosperous. This is a summary based on the book Learn to Earn by Peter Lynch. You will find the link to buy this book in the description below. If you like this video, give it a thumbs up and share it with your friends too. Tell us in the comment section below about your book recommendations. Do subscribe to our channel. It won't cost you anything but brings a smile on your face. Don't forget to hit the bell icon to not miss out on amazing book summaries.